From Cornell University in Ithaca, upstate New York, welcome to Cornell Keynotes. I am your host, Lourdes Casanova, Senior Lecturer and Director of the Cañizares Center for Emerging Markets. The keynote today is under the theme Unicorns from Jungles and Deserts, the Rise of Digital Entrepreneurship in Emerging Markets. And within this keynote, we will be presenting the second book of the Emerging Multinationals Research Network, a group of academics that meets monthly, and we have produced 2 books, working on the third one and presenting in conferences, always in subjects related to emerging economies and emerging market multinationals. The book this time was published by Cambridge University Press, and the title is Unicorns from Emerging Economies, Creating Value Through Technology and Innovation. And we are very pleased to be joined today by Veneta Andonova, who is the co-editor of the book and will explain more about the book, and professor at Universidad de los Andes in the School of Management in Colombia. Professor Eric Stam from Utrecht University and Carnegie Mellon University in Africa, and Professor Ricardo Buitrago, Director of the Dunning Latin American Center at EGADE in Mexico, and the 4 of us are contributing authors to the book. This keynote will explore how entrepreneurs in emerging markets are building some of the world's most dynamic digital companies, often in environments marked by infrastructure gaps, institutional complexity, capital constraints, and underserved consumers. These challenges can be barriers, but can be also opportunities and sources of innovation. When we look at mobile payments, we see how it started in M-Pesa in Kenya, went to China with WeChat Pay and Alipay, and then UPI in India or Pix in Brazil are now leaders of mobile payments in the world. Other fintech platforms have been expanding, and all of them produce financial inclusion and logistics startups solving the last mile delivery that can be really challenging in emerging markets, health tech that allows to lower the cost of delivering top health services in emerging markets, edtech, agritech, and more AI-enabled ventures. Emerging markets startups are creating solutions that are locally grounded and increasingly globally relevant. This webinar will examine how digital entrepreneurship is accelerating across Latin America, Africa, Asia, or the Middle East, and how ecosystems are forming beyond traditional global tech and entrepreneurship hubs. So beyond the mythical Silicon Valley, there are other hubs also promoting and nurturing startups. Just a little bit of housekeeping. Viewers we are interested in hearing from you today, and we'll take your questions. Please submit them in the chat. And heads up for resources, tools, and useful links in the chat as well. As always, today's live stream is being recorded and will be available to view shortly after the show is over today. And also keynotes are simulcast to YouTube, LinkedIn Live, Facebook Live. We will share the links to those channels in the chat as well. But let's get into the content. So I will start with you, Veneta, because you are one of the editors. What are the main messages in the book? And could you please also elaborate a little bit more about the Emerging Multinationals Research Network that is behind this book and the previous one and the one that we are preparing?
Thank you, Cornell, and thank you, Lourdes, for hosting this keynote on the topic of unicorns from emerging economies. Of course, I will take the challenge, and now I'd like to present, of course, our recent book, which is co-edited with Professor Juana Garcia and Professor Diego Finkelstein. It also benefited from the contributions of all the participants today, but also all the members of the Emerging Multinational Research Network that you mentioned. As an international research group that you, Lourdes, created more than 10 years ago, we identified the need to focus on unicorns from emerging economies because these high-valued and high-growth companies have embraced technology and innovation in unprecedented ways and transformed industries and societies. Little is known, however, about the trajectory that these companies have had, and academic research on this phenomena is not abundant, despite the transformational role these companies have on their national entrepreneurial ecosystems. And we, as a community from the Emerging Multinational Research Network, believe that there are lessons which these companies can provide to the rest of the world. So therefore, let's start discussing the key takeaways that all the colleagues have contributed to generate as a community around the rise of unicorns. These are privately held startups valued at more than $1 billion US. And they have become one of the defining phenomena of the modern global economy. Originally, they, as you mentioned, they were associated with Silicon Valley and the advanced economies, but now they are increasingly emerging from the global south. Impressive increase in China, India, but also Southeast Asia, Latin America, the Middle East, and Africa. And the book actually provides evidence that this shift is economically, politically, and socially significant because it signals a transformation of how innovation, entrepreneurship, and technological power are distributed around the world. So what are the main messages? I would say that the main message is that unicorns from emerging economies succeed despite the fact they're operating under structural disadvantages within their contexts. Many developing countries face, as you mentioned, institutional weakness, limited access to capital, poor infrastructure, very ineffective educational systems, and very high levels of inequality. And despite these traditional disadvantages, after taking a careful look at the phenomena around these areas of the world, which we called emerging economies, we observe that unicorns often turn these disadvantages into opportunities. And how they do that? By creating, we call it tropicalized or context-specific innovations tailored to these challenging local conditions. We also found in the book evidence that is consistent with the idea that these companies are not simply copying Western business models, and instead they adapt technology to local realities in ways that are often more resilient, cheaper, and very practical. Therefore, their focus on sufficiency and thriftiness is remarkable, and it is a distinguishing component of their competitive advantage. We also find that there is evidence that such companies, unicorns, need specific environments, we call it entrepreneurial ecosystems, where they're born and thrive. And we certainly notice that China and India are the leading examples of emerging market ecosystems that successfully support unicorn creation. And they have some really inherent advantages, such as large domestic markets. They have immense and very talented technical skills that are effectively transferred through their educational systems to the population. There is strong government support and, of course, a very generous investment in digital infrastructure. I would say that the companies that we are discussing here are also unique in the ways in which they work with the technological adaptations, the contextual realities. And certainly, as I said, there are big winners in a high degree of, let's say, asymmetry among the emerging markets in the quality of their entrepreneurial ecosystems and the number of unicorns. And Lourdes, when I just finished to sum up kind of the key takeaways, I would invite you to contribute because you wrote a very impressive chapter, actually 2 chapters on China. So I will basically leave the whole topic to you later in this conversation. But I would like now to mention the fact that unicorns are deeply connected to the global geopolitical competition, and certainly Lourdes' contribution to this conversation with her knowledge on Chinese unicorns will be essential. What I'd like to mention here is that we identified that there is a real race for technological dominance that affects the phenomena of unicorns in emerging markets. We see that digital platforms and technology firms increasingly increase their influence through boosting data control, economic power, and political influence. And essentially, unicorns are no longer viewed solely as business agents. They're strategic assets connected to national security, technological prowess, and global influence. And I think we will touch upon this point later in more detail. Before I kind of wrap it up, I would like to send 2 more messages that come out as significant takeaways of our joint collaborative work around the book. The first one is that unicorns in developed economies typically benefit from abundant funding, sophisticated infrastructure, and mature markets. Their innovation are future-oriented and protected through intellectual property legislation and regulation. Unicorns from emerging economies are actually functioning in a different context, and they need to develop adaptability, resilience, and very practical approach to innovation. They tend to focus on digitizing existing industry. In particular, you mentioned finance and logistics, but e-commerce, supply chains are also domains in which unicorns from emerging economies excel. Their competitive advantage often comes from solving inefficiencies and institutional voids that many multinational corporations can actually not address effectively and struggle to address, sometimes even because their ERP systems cannot accommodate the type of processes that are needed in order to be fast and adaptable to the rather unstable institutional environment across emerging economies. Before I finalize my kind of brief summary of this very interesting and rather long book with contributions from all around the world, I would say that the big takeaway here is that our objective analysis, the unicorns from emerging economies, are certainly a phenomena on the rise, and they reflect a broader shift in the global economic order. It's not just a historical accident. We see that innovation and technological leadership are no longer concentrated exclusively in advanced economies, and instead emerging economies are increasingly shaping the future of entrepreneurship, of digital transformation and global competition through unique, locally adapted and highly scalable models. So Lourdes, now I'd like to invite you, as I promised, to talk about your chapters as you and your co-authors looked at the most successful birthplace of unicorns after the Silicon Valley and the US, which is China. Back to you, Lourdes.
Thank you very much, Veneta. So Anmiru, my colleague, and then Yinki Ye, that was at that time a research associate in my center, and is now a PhD candidate at UC Berkeley. So we explored two themes around China. One were the hubs, and the other one the title was China private sector innovators that were the challengers of the new challenger. So, and I'll explain more in a minute. The hubs are well known. One is, of course, Shenzhen. Shenzhen benefits from two things, or three things, I would say. First, proximity to Hong Kong, with all the finance availability. Second, Huawei, the tremendous company that is the biggest telecom provider in the world, the biggest or the second, with Ericsson. And of course, now more and more in mobiles, in semiconductors and others. And so this company also appears as a magnet for other companies, for other startups that pulls them because needs them. And also the famous market where you go to get your prototype done. You go, you try, it fails, you redo it immediately. So one is Shenzhen for sure. Shanghai, of course, the industrial city, very important in China. And the third that has been less known, that is Hangzhou. Hangzhou is where Alibaba was born, a tremendous university, Zhejiang University, and came to the fore with the launch in January 2025 of DeepSeek. And that's when definitely became apparent that it was a very important hub. So I mentioned in the introduction the mythical Silicon Valley, but of course, from the size of the US, you have 3 times the size of China. So it's only normal that you have many more mythical Silicon Valleys in China. And then we also see this tremendous collaboration between the central government, the local governments, the province governments, the private sector, and of course the universities. It's not a coincidence that all these cities have great universities that are part of the ecosystem. Then in the other chapter, when we say how the new challengers were born, we looked back at 2 companies, Tencent and Alibaba, both right now public companies, amongst the most valuable companies in the world, and the ecosystems they create around them. So both are behind of super apps. Alibaba started as an e-commerce, and actually what they realized when they started was at the same time that UnionPay, now the biggest credit card company in the world, was starting. But the development of UnionPay was not as fast as the e-commerce. So they needed, so either you do cash on delivery, as Jumia did in Africa, and Mercado Libre in Latin America. So you do either cash on delivery, or you develop your own payment system. Jumia Pay, associated to Jumia, or Mercado Libre Pay, Mercado Pago. That is the only way that you get away from, of course, cash on delivery. And cash on delivery, of course, very risky, very expensive, and it takes very long time. So Alibaba launched Alipay, and then again, WeChat, an app that you use to book your hairdresser, to pay your bills, etc., launched WeChat Pay. More or less at the same time, first Alipay, then WeChat Pay, and then definitely both of them being responsible for now that the amount of payments that are done in China by mobile payment is tremendous. And again, the whole ecosystem that you developed amongst them, because what unicorns have, and we shouldn't underestimate, unicorns have this pull factor of motivating our students in Cornell and beyond to say, yes, this is possible. Yes, we can do it. And then this is a tremendous motivational factor for the youngers that, again, in the dorm, as it happened in the garage, in their own homes, they develop their own. So this Alibaba and WeChat and Tencent had the same pulling factor to say, yes, we can do it. Strangely enough, in a country where the government has a tremendous, or the SOEs, the state-owned enterprises, have a tremendous power, in this case, we find two private companies. Again, Tencent and private and public, but Tencent and Alibaba are not state-owned and are behind this initial innovation that again brings then later on more and more unicorns, because their innovation pulls many students and motivates many students and many youngsters. So Tencent and Alibaba, definitely. Also the role later of ByteDance behind TikTok. We are all using Reels and Shorts, but the first one using it was ByteDance, TikTok. Again, the first social platform, the first social media that was not from a country in the US. We have Spotify in music, but definitely TikTok was the first one that the origin was not the US. So again, a tremendous power of influence and of one of the biggest unicorns. But then we have seen others, Shein and Temu. Going back to what I mentioned before, that strangely enough, Alibaba and Tencent are private, we see similar systems in mobile payments that the government is much more involved. In India, UPI is best in what they call the digital stack, and that was launched by the government. Even PIX was launched by the Central Bank of Brazil in association first with the state-owned banks and then with all banks. But initially was the Central Bank of Brazil. And if we look at M-Pesa, again, the Central Bank of Kenya had a very important role. It was Vodafone, but definitely in association with the Central Bank. So this mismatch, I would say, or this paradox that in China we see the private sector pushing initially for the innovation. Then, of course, we are now in another phase. The book, we finished writing the book in 2023. Now everything is AI, but in AI we see a replica of what I mentioned right now. We see also private companies, we see ByteDance, of course, in electrical vehicles, we see verticals in AI. While in this country, we see more OpenAI and Anthropic launching an LLM, and then see how we adjust it. In China, we see much more into the verticals, embedded in AI being embedded in different industries. We also have an LLM, I mentioned DeepSeek, but again, different because it's open source. And again, we don't know exactly, but the development, another very important factor in China is everything is cheaper because the salaries are cheaper, because the cost of capital is cheaper. So then, according to the figures that were given to the public, the development of this DeepSeek was much cheaper than the development of the other LLMs like Claude or ChatGPT. The AI, as Veneta mentioned, all this is becoming very political. I mentioned Huawei linked to Shenzhen. Of course, Huawei is the source of sanctions, both in Europe and in the US, but that so that has not been a barrier for Huawei, because Huawei, regarding geographical footprint, according to the data that we publish in the report that my center publishes, is in 168 countries. Is one of the most, looking at the, again, geographical footprint in most countries. So it's one of the most, one of the companies facing most tariffs, one of the most innovative in China, and again, one of the ones that has expanded the most. So we believe that, and I would like to finish with 2 or 3 data points regarding AI in China right now. Again, if we look back we saw these original disruptors that I mentioned going back to unicorns and more unicorns. And then so 36% of the research published in AI has China as an origin. 50% of the world's AI researchers are Chinese. And 70% of the targets that Chinese government set up for 2030 have been already reached. And China is now #1 in AI patents filed in the world. So as Veneta mentioned, China is in a tremendous innovation drive that started very long ago, that we see so many unicorns, less than in the US, but definitely the numbers are very impressive, and definitely looking at vertical stacks and looking also at the whole ecosystem, chips, servers, clouds, and LLMs, all developed in-house and looking for self-sufficiency. So I will now pass to Eric Stam, who will also summarize his chapter. Eric, the floor is yours.
Thank you, Lourdes. Great to be here amongst the authors of this wonderful book. So unicorns were once the almost exclusive domain of Silicon Valley, but the landscape has been changing. So emerging economies are now playing a very important role. And this shift also, I think, reflects how startups grow and how the industries evolve. One example being AI. The term unicorn itself is quite recent. So 2013, it was coined in the US. And in 2013, there were only a few dozen unicorns outside Silicon Valley. And that has changed. There are now many more unicorns around the world outside Silicon Valley. Also because IPOs are sometimes less attractive, the network effects can also be achieved without going public. And also there's a lot of demand for these kind of goods without the need for IPOs. But unicorns are more than just high-value startups, so more than just this 1 billion of valuation. They're seen as engines of economic growth, technological leadership, but also societal transformation. So imagine how we would speak to each other without Zoom, a unicorn. How we would listen to music without Spotify. Think about Uber, Airbnb. If you're in Nigeria, think about how you would pay without Flutterwave, or in China without WePay or Alipay. In COVID times, how would we have tackled COVID without Moderna, without BioNTech, both unicorns? And nowadays, we all talk about AI the whole day, but AI without DeepSeek, without OpenAI, without Anthropic, these are all unicorns that really drive technological change. So it's no wonder that, for example, the European Union wants to double its unicorns over a decade, but also emerging economies like Vietnam, Indonesia are setting ambitious goals for increasing the number of unicorns. Even African cities now want to become Silicon Valleys in their own right. Yet the distribution of unicorns remains highly uneven. The USA, China, and the EU dominate. And within these three blocks, just a few city regions accounting for the majority of unicorns. So yes, Silicon Valley is still dominant, but also New York, Boston in the USA. We were just talking about China, so that's mainly Beijing, Shanghai, Shenzhen, and Hangzhou. I was also visiting professor at Zhejiang University, and I remember that being the place for Alibaba, but now, of course, DeepSeek also coming from that region. And indeed, also the rise of Chinese universities and R&D, I think, is really different than 10 or 20 years ago in that sense. But also in Europe, it's mainly London, Berlin, Paris, Stockholm, and Amsterdam being responsible for unicorn creation, and also globally. So unicorns are still concentrated in a handful of countries, and within these countries, just in a few regions. However, our analysis and the chapter in the book also shows that emerging economies are increasingly part of this unicorn landscape. While the US and China still lead, there is a second league of countries that now consistently produce 10 or more unicorns per year. So think about the UK, Germany, France, Israel, and Canada. That's what you would expect. But also the Asian tigers, Singapore, South Korea, and India and Brazil that have also produced a lot of unicorns recently. Notable missing economies are Russia and South Africa, so the other members of the BRICS, which are not doing so well. On the other hand, we have emerging economies like Mexico, Indonesia, Colombia, Thailand, and Turkey that are really on the rise. And when adjusted for population, smaller nations like Singapore, Israel, Estonia, and Ireland stand out as high performance, sort of refuting the idea that you need to be in a big economy. Of course, the USA still also has a lot of unicorns, even controlled for a population size. We also see that industry trends differ among regions. So globally, fintech and internet software firms dominate, but well, I think AI is really on the rise. But in emerging markets, you see more e-commerce firms, more business to consumer, and fintech. So I think there's sort of a leapfrogging there. A lot of the emerging economies have all kind of online payment services that are more slow to take off in advanced capitalist economies. While we see the rise of more deep tech unicorns in advanced capitalist economies, which I think China now also includes. So the path to unicorn status differs very much by context. And I think the allure of unicorns is clear, but is targeting them a sensible policy? The data suggests, well, unicorns are becoming more global, the distribution remains highly skewed. For emerging economies, I think the challenge is not just to produce more unicorns, but the more daunting and difficult task, how to create ecosystems that support sustainable, inclusive growth. As the geography of unicorns evolves, so too must the strategies of policymakers and entrepreneurs. I think this book provides new insights to have a better idea, better understanding, and also better grasp of how to deal with these high growth firms and what they mean for the economy and society. So the question is no longer if emerging economies can produce unicorns, but how they can leverage this phenomenon to drive long-term development. Having said that, I'd like to give the floor back to Lourdes.
Thank you very much, Eric. Very interesting overview. I would like now to turn the floor to Ricardo. What about Latin America? That was the subject of your chapter. Please unmute yourself.
I'm sorry. Hello, everyone. I'm happy to be here. Thank you, Lourdes and Cornell Keynotes, for inviting me to speak today about our chapter in the book. And on behalf of my co-authors, Armando Borda, Fernanda Cahin, and Michelle Hermans, I'm going to present the key findings of our chapter, Latin American Unicorn Firms Transcending Entrepreneurial Hubs. Beneta mentioned something regarding the particular conditions we live here in the region. And basically, our research, our chapter starts in the middle of 2010s. In Latin America, many venture capital backed firms, particularly the high-tech sector, started, and nowadays the region held like 33 unicorn firms valued in over $1 billion, and the firms are mainly concentrated in Brazil, Mexico, Colombia, Chile, and Argentina. And but how these companies reach such high valuation in a region that historically is known for intense political and economic swings? So in our chapter, we try to answer that question. We argue that the phenomenon is not just about having a great idea, is a result of this dynamic interplay between local entrepreneurial ecosystems and the unique boundary pushing strategies that the firm must pursue to transcend the local context. And the local context is what we call the entrepreneurial ecosystems that are traditionally understood as localized networks of universities, investors, policymakers. And these unicorns emerge from particular tech hubs like Sao Paulo, Mexico, Buenos Aires, and Bogota. What we found is that these cities provide the necessary human capital and early funding, but focusing exclusively on those physical conditions is not enough to understand how the companies scale so massively, as Beneta mentioned. They created this digital business, so we call in our chapter about the digital ecosystem. By leveraging in digital platforms, the startups break free from these geographic limitations to connect directly with partners abroad, with venture capital, and of course, to millions of end users across borders. We also found that to make this leap from local startup to a regional unicorn, the founders rely on a particular critical strategies. First, the human and the social capital. On the contrary to the stereotype that young college dropout, we found that the Latin American unicorn founders are often in their 30s or 40s. Frequently, they hold international education. They have significant prior work experience either in finance or tech. So this background helps the building of resilience and social networks that are needed to handle our volatile markets in the region. Second, they engage in the tropicalization of business models. They not only find good models abroad, but also they bring them to the region and adapt them to the unique Latin American challenges. So it's not only a matter of copy and model, it's a matter of innovate the model for the region to survive here. And third, they scale internationally much earlier than the Silicon Valley counterparts because the constraints of the size of our economies doesn't provide the large enough customer base to reach critical mass. So the unicorns in the region must expand across borders very early in their lifespans. Finally, founders excel at resource orchestration. They start as a core platform and constantly reconfiguring, offering different things, branching into new verticals like fintech or edtech or groceries. And another important thing is that they are not afraid to exit markets or drop services when the macroeconomic prospects shift. So that's mainly the core of our chapter. So Lourdes, back to you.
Thank you very much, Ricardo. Actually, you are a great introduction to the question, to one of the questions, the question from Kamal, that says that he's a PhD student and he wants to write about the first unicorn in Morocco. And he says, how can I approach the empirical part of the thesis? So I think, Ricardo, you have answered, because unicorns don't come in a vacuum, they come within an ecosystem. So if you look at, there is this very important polytechnic university now in Morocco. I'm sure that one of the startups linked to this university. Then the VCs. What are the VCs in Morocco, the venture capitals, the sequoias that always have delegations to go to emerging markets to see which companies they are investing. So look at the ecosystem, look and bet for some of those entrepreneurs, digital entrepreneurs, that one of them will become a unicorn, and look into that and talk about the ecosystem. Definitely from this ecosystem, one company or two or more, hopefully, will become unicorns. Obviously, Morocco is a small country, and probably the unicorn will not only be from Morocco, but will be a regional one. That's my bet. Any other comments, Ricardo, Eric, or Beneta?
No,
Yeah.
Fantastic. I'm so happy we can support a PhD student interested in the topic. And I immediately want to provide a reference to an amazing chapter in our book written by Ayman Ismail and Sharif Kamal from the American University in Cairo. And their chapter is precisely the question, can the Middle East and North Africa region build its indigenous startup unicorns? An analysis of unicorns and soonicorns, and the supporting entrepreneurial ecosystem. Amazing reference, and good luck with your PhD. And I think you'll find examples, you'll find comparative data, and certainly I think you will be encouraged by this chapter to pursue that project. Eric.
I'm a frequent visitor of Morocco, so nice to hear this question. I just returned from Rabat, and I've been in Casablanca, Marrakesh. And indeed, I think Morocco is one of the next African countries to produce a unicorn. So we see unicorns now in Egypt, Senegal, Nigeria, South Africa. And according to our own work on the Africa Entrepreneur Ecosystem Index, Morocco is number 3 in ecosystem quality. So I would put my bets on Morocco. And if you want to really understand it, I think you have to understand the education system, because almost all unicorn founders are highly educated. You also need to think about how elite systems are present, but also open to newcomers. And I think for African countries, and that counts for many emerging economies, we have to think about the diaspora. So how are founders getting international exposure, international links, access to capital? So who are the founders in Morocco that have gone to the US or to France or to the Gulf countries that can give back to the economy? So I think these are all elements that you need to study more carefully to understand why and when the first unicorn in Africa, no, not in Africa, in Morocco will emerge. And I'm sure studying the soonicorns, also in the chapter in the book, would give you more insights into that.
And,
yes, if I may add something.
Ricardo.
If I may add something to the comments of my colleagues. Latin American unicorns are actually a very good example of how to overcome very, very difficult institutional conditions. So what we found in our chapter, and of course the suggestions just Benita made, looking the other chapters in the book, can help you understand how you are not bounded now for the traditional conditions of the entrepreneurial ecosystems. Now you can overcome the limitations of the traditional entrepreneurial ecosystems. That's why many Latin American unicorns and soonicorns have been successful going abroad and scaling up the business. So of course, I invite you to read our chapter and the others that are related with your research and the interest in unicorns in Morocco.
There is, again, another PhD student who wants to know how we define emerging markets in developing countries. That's how I start my classes. What is an emerging market? And definitely it was at the origin a way to organize the world. It was developed first in the 80s by Antoine van Agmel and later by the late Mark Mobius, with whom we have been working a lot. So emerging markets was a way to say, okay, you have the least development countries, you have developing countries, and then you have, of course, the G7, the developed countries, but then you have something in between. But I'm going to answer with a question that we discuss more and more. Is China still an emerging market? And what about, for instance, Korea? Korea is part of MSCI, the Morgan Stanley Developing Market Index, Emerging Market Index. Is Korea an emerging market? So definitely a fuzzy concept, a way for us to look at the rest of the world, sometimes in a paternalistic way. And for sure, a lot to be discussed on that. We use what we call E20, so countries that are important in the global trade, that have a GDP per capita that is not a GDP per capita of a developed country, but not very poor, and then also poverty and extreme poverty. A country has not developed till they completely eliminate extreme poverty. So any other views from Benita, Eric, or Ricardo?
The question sounds like my reviewer number 2 all the time I submit a paper on emerging economies is, what is an emerging and frontier economy? So I mostly agree with Lourdes regarding the classification. at least for my research, I use a cross-reference check. I look for the economies that are at least in 3 different classification about emerging economies. But what I found in my research and the way I explained to my reviewer number 2 the question is that the emerging economies are those that are improving in a consistent way in different factors, institutional conditions, infrastructure, political stability. So that's the way I defend the structure of my research. I mostly study 48 different economies between emerging and frontier economies. So if my papers are available online, free to access, so you can check there and see if my definition of emerging economies helps you understand a little bit more these economies.
Eric, you want to add something?
I'd like to be a bit contrarian here. So I think we should go beyond the concept of emerging economies. So people say you have developed economies like Sweden, Italy, the US, and you have developing economies. I think all economies should aspire to be developing. So I'd like to think much more in terms of progressing, regressing, and stagnating economies. So, for example, in Europe, Italy is stagnating, while Sweden is still progressing. In Africa, Rwanda is progressing, while Mozambique is regressing, and South Africa is stagnating. So I think thinking about progress, regress, and stagnation in all kind of settings, I think is the new way to think about this. But perhaps we can write another book about that.
Sure.
Veneta, something to add?
Just a few kind of idea, actually 2 ideas. The first one is that the mere concept of an emerging economy has been enriched and it has been transforming, right? So there is not something like a universal consensus. As Ricardo said, he is using at least 3 references in order to be sure that he is making kind of the right definition of the subset that will be the most acceptable in terms of journal editorial decisions. Now, this being said, I also want to mention that now the annual reports which Lourdes and Anmiro are writing yearly under the umbrella of the Canizales Center for Emerging Economies is actually also has been evolving. Now, Lourdes, you and Anne, you're talking about 20 plus 1, right? Guess who is the one? Of course, China. And then if you look at this trajectory of 10 years of writing these reports on emerging multinationals and their context, of course, we didn't have the plus 1. So what I'd like to add, Lourdes, is that we are actually taking a more dynamic perspective, a bit along the line, not as extreme as Eric suggested, but there is that notion of an evolution that has been going along with the construct. And I think it will be like that because, of course, no country's or fate is set in stone. And, we are living in a very dynamic world in flux. So a lot of things probably will change in the years to come.
Thank you very much. We have also another very interesting question from C. Duncan that says, thank you for the topic. Could you expand on e-commerce expansion? Again, a lot to discuss. We mentioned a few leaders in e-commerce. And actually, in the first book that we wrote about From Copycats to Leaders, Innovation from Emerging Markets, we covered e-commerce. We had a chapter with Diego Fincherstein and Anne Miru on this subject. And if we look at retail, traditional retail, the international expansion of traditional retail, for instance, Walmart, the biggest company in the world by revenues, I believe is 27 years in a row that is the biggest company by revenues in the world. if we look at the international expansion of this tremendous company, of this great company, we see that they are very successful in Mexico, but in other countries, the expansion has been more difficult. Why? Because retailing, what we buy, what we eat, is very local. I was thinking of Carrefour, another French, very important, that has expanded in Morocco and other parts of the French-speaking African countries. So definitely not easy to expand so the question that we were having in the chapter is, will the same happen in e-commerce? Because we see regional players, we have mentioned a number of times Mercado Libre, originated in Argentina, that is the regional player and the very regional leader in Latin America. I mentioned Jumia, but there are others in Africa. Jumia originally from Nigeria, but expanding all over Africa. You have Alibaba, of course, in China, quite successful international expansion, but we don't know yet what will happen, and because of many other reasons, because you need to establish very strong supply chains, very reliable, and we are in a moment in which all countries are moving to become more efficient. So we don't know yet the other side of the road. Very interesting subject to explore because of cultural considerations and also, of course, global value chains considerations as well. Other comments? Veneta.
Yes. I would like to add a few notes on that. So in terms of e-commerce, we have been observing that in emerging economies, there is a vertical that has to do with logistics, which has proven to be rather successful. And of course, this is very closely related to the e-commerce business. And I'd like to mention Mercado Libre, which is kind of the Latin American reference point Lourdes already pointed your interest into, and say that Mercado Libre is actually at the forefront of optimized logistics, and they are implementing really technology at the forefront, such as, you know, within their storage and distribution center. What we have been seeing is that the usage, for example, of drone technology and technologies, you know, that the rest of the world is experimenting with. So therefore, this vertical has proven to be quite resilient and effective from the perspective of the emerging economy birthplace. And we see them actually being at the forefront of the industry at the moment, even though they are not a unicorn anymore. They're a corporate business that is very, very successful.
Eric, Ricardo, any more comments?
No, nothing more to add to this boost of e-commerce, but also not only in terms of physical products, which is Amazon, Mercado Libre, but also in terms of services. Now the communication, the direct to consumer, many companies are now reaching their customer base through this channel. You name it, dental services, airlines. Actually, if you play sports today, you receive your tickets to your concerts, to the games, whatever. It's not only a matter of physical products, but everything is now going through these electronic channels. So even your appointments to your doctor. So yeah, that's something I want to point.
Eric, something else? Or let's move to the last question.
I'd like to move to the last question.
Okay, so the last question comes from another PhD student. We are thrilled. We as faculty are thrilled to have PhD students interested in the subject. In fact, my center organizes a PhD research day so that we want PhD students to work more on emerging markets. On international business, we have focused on emerging markets. As we all have said, we need to know much more from these markets. So then The question from Nicolas is saying that high inequality countries like Colombia, in those countries, the access to capital, talent, and infrastructure is deeply uneven.
Agree.
So how we, in the book, address this issue? Inequality can be a barrier, but also, as we have mentioned a number of times, how mobile payments that contribute to financial inclusions are very prevalent, are much more prevalent in emerging markets than in the US or in Europe, where we are so used to pay with credit cards. So inequality actually as a factor of innovation in which digital ventures contribute to reduce and make sure that digital ventures solve problems related to inequality and poverty. Veneta, Eric, Ricardo.
Yes, if I may add, for sure, there are business models that are precisely built to bridge that gap, which traditional business models and infrastructure shortages and inefficiencies, for example, in terms of unequal access to high quality education, is a structural problem for many economies. In Colombia, it is very well understood and very well identified, but we have for many years not been very effective in finding the solutions. Now, digital channels are certainly trying to bridge that gap, in particular in the creation of STEM-related content for areas with, let's say, not so impressive quality of educational services. We also have regions in the country where there is not electricity on a continuous basis, which certainly affects the learning opportunity for kids that have to rely, on natural light in terms of, so kind of, there are many things, for example, that can bridge that developmental gap while we're solving the gap in development across regions. So we know that. Now, what we can do is actually create the business models that can solve it with business logic, by the way. But something else, this is the most important probably message that I want to send here, is that entrepreneurial activities are very highly concentrated in terms of the relational social capital of the people who are interconnected for the opportunities that are highly sensitive to quality of education, the quality of the social network, the opportunity to bridge outside the boundaries of your own country. So what we actually can do is understand the gap that exists between those that have that particular social and network capital and those who do not have it. Actually, we're working precisely on that elite versus non-elite entrepreneurial activities in Colombia in order to bridge that gap and compensate for some inherited discrepancies. I would definitely encourage you from countries such as Colombia to engage into high-powered networking opportunities with entrepreneurship service organizations where such networks are available. And I know there are such opportunities, so be proactive.
1 minute answer, 30 seconds, Eric or Ricardo.
So unicorns is a very uneven process, but we like to have countries, societies which bring the best and the brightest into an entrepreneurial career and not have them being locked up in extractive activities, exploitative activities. So it's much more about meritocracy and about mobility, and then building firms that serve the masses. So like Time, like Flutterwave, and that really open up opportunities for a large part of the population.
Ricardo?
Well, 3 words: linkage, leverage, and learning. Look abroad. Always abroad, you can find the right partner to help you grow. I know in our countries the inequality is persistent, but if you look abroad, you can find someone who help you either in knowing things or leveraging in finance, but don't stay bounded by your local context. Always look abroad. You can scale.
As I have the privilege to close, I would like to mention that last year, the Mark Mobius pitch competition was won by a pediatrician that was addressing inequality. She was from Universidad de los Andes, and the pediatrician was using WhatsApp and other technologies to reach out kids from very remote areas. So we gave the prize to this tremendous woman, Natalia Cano, who was extremely innovative to create a digital startup to close inequality. So thank you very much. Thank you, Ben and Chris and the whole eCornell team for facilitating this discussion. Always great at the Cañizares Center to work with you. And thank you, my dear colleagues from the Emerging Multinational Research Network, Ricardo and Veneta and Eric. You are not yet part of the network, but you will be soon. So thank you very much. Looking forward to the next discussion, and thank you to the audience for the very interesting questions.